Hello everyone, I am Prateek Shah, Chartered Accountant and also the Head of Finance at Strata Property. Today we are going to talk about lease rental discounting or LRD in short. LRD as a concept is all about how you are part funding an asset acquisition. Instead of using your own funds completely to buy an asset, you are taking a bank loan to fund a part of your asset acquisition. Uh, I have never come across any HNIs or ultra HNIs who put their money completely into commercial property or for that matter any real estate property by their own funds. They always take a part amount through the bank loan. Interestingly, I have never come across any HNI or ultra HNI who would be paying taxes on the entire income. They would always want to push their taxes as much as possible and for as low as possible. It's all about managing your taxes. If you get your entire income as interest income and without any leverage, you are going to pay income tax on your maximum marginal rate, and in most cases you would be in the highest bracket of 30%. However, if you are taking a leverage through a bank loan, you are also funding a part of the asset through a bank loan. So the interest that you pay to the banks is deductible from your interest income or your rental income for that matter. And hence the interest payout is allowed as an eligible deduction for you. And hence the benefits of taxation come into picture where a deductible expense is helping you to save your taxes or minimize or defer your taxes to the largest extent possible. Completely depends on investor to investor, property to property. If a property has a higher lock-in of 8 years, 9 years, properly typically if you look at warehousing or industrial deals, you get a longer lock-ins from the tenants for 8, 9 years or 10 years also. In that case, you are able to take a higher amount of loan for a longer duration. So in that case, you can even go up to 40-50% of the asset to be financed through the bank loan. However, in case of office assets, you might get a lock-in of 4 years or 6 years, or for that matter, in that range, 5 years. So in that case, you would not want to stretch the repayment beyond your lock-in period, or probably at max 2-3 years beyond the lock-in period. So in that case, your leverage can come down to as low as 30 or 40% also. So there is no clear answer to how much debt is good. It completely depends on the lease of each transaction. What is the lock-in? What is the amount of EMI that you are going to pay, etc. So those variables come into picture when you have to answer the question, how much is good and how much is bad. Yes, definitely there are downsides, but what we try to do is we want to minimize the downsides as much as possible. What could be a typical downsides is one downside could be the interest rate going up. While your rental income from the asset remains constant in terms of the lease with the necessary escalations coming in from time to time, your EMI payment can go up or can go down depending on the interest rates. If the interest rates go up, your cost of borrowing goes up, and hence that is one of the downsides. The other downside is your tenant leaving, but there is a protection that you can cover in terms of the downside for the tenant. If you are taking a loan which is matching to your lock-in period of the tenant, you're protected to a large extent, wherein even if the tenant wants to walk out during the lock-in period, you are able to pay the balance amount of loan from the lock-in revenue that you are going to get from the tenant. So these are some of the downsides that you have in a LRD. But largely, when you structure a deal, when you look at all the parameters, you can minimize your downsides to a large extent. Let us understand LRD with the help of a simple illustration. Basic inputs: 25 lakh ticket size, rental yields of 9%, debt cost of 8%, and a tenor of 6 years over which your lease lock-in is going to mature. 3 use cases: case 1 100% equity, case 2 75% equity, and case 3 62% equity. So in each of the 3 use cases, your returns are going to be very different. On a 25 lakh investment at 9%, you are going to get 2,25,000 as annual rentals, which over the course of 6 years becomes 13.5 lakh, and a sale value of 33 and 33.5 lakhs with a 5% cap rate, capital appreciation, income tax of 30% and a 20% capital gains. So here you can see how your returns on a pre-tax and a post-tax are different in each of the use cases. Your 2,25,000 rental in case A becomes 1.5 lakhs after 30% taxes, and your other returns on these lines. So if you look at your IRR, which is your returns calculator, you're looking at a 13% return on a pre-tax becoming 11% because of the taxation eating out into your returns. However, in case of use case C, where you are taking a 62% debt and a 62% equity and 38% debt, you are looking at a 15% IRR, which is 4% higher than your 100% equity funded case. This will become a very good choice in case you are getting a rental return which is more than your cost of debt. In case your cost of debt is higher than the rental income, LRD is as a product or a tax saving hedge is not going to work for you. In case A, where it is 100% equity funded versus a case B or case C, you're having a 2% return cap, 2% return in terms of pre and post tax, 11% and 13%. Investors are paying taxes every year on the rental incomes they are getting every year. However, in case B and case C, they are the tax liability is getting significantly shifted across the years, and in the initial years, since you are not getting any returns in your hands, the entire returns are getting used to pay your LRD EMI obligations. Your tax obligations are getting significantly delayed, and hence your tax liabilities are also delayed and hence are leading to a higher return. What is the optimal leverage percentage? There is no such thing as an optimal level of debt or an optimal leverage percentage. It completely depends on case to case. What is the rental income that you are getting? What is the lease lock-in? What is the cost of debt that you are getting? At what cost is the debt coming to you? What is the tax rate, etc.? So you need to take a holistic view when you want to take out what is the optimal debt. Your lock-in period or the lease period of the tenant also comes into picture and plays a very crucial role in identifying what is your optimal level of debt. So how are we different? What are we offering to the investors who take the leveraged offering route through Strata's platform? We do not intend to take more than 50% of the loan to value ratio, which is in case of a property worth 100 crores. Your loan at any point of time is not going to cross 50 crores. This kind of provides a 50% cushion to the lenders, wherein against a 50 crore loan, they have a 100 crore property. This also provides an opportunity to the investors to increase their returns on a post-tax IRR basis, where the post-tax IRR in case A of 11% becomes 15% in case B and C on a post-tax basis, which means effectively 4% higher IRR, and over a longer tenure, the returns become multifold. What are the salient features that we are looking at in a leveraged offering? The loan to asset ratio of not more than 50%. All your monthly rentals are going to repay your EMI obligations. The investors' outflows will only happen post the company paying all the EMI obligations. This will lead to a higher ROI or a higher IRR for investors. This is a hybrid product wherein you are taking a higher risk and getting a higher returns. So what are the risks of debt financing? Debt is also referred to as leverage. Here the investor is borrowing or part financing the asset acquisition through the bank loan, which is on the basis of future rentals that the tenant is going to pay. So what if the tenant stops paying, or tenant vacates the property during the lock-in period? Your EMI obligations get severely affected if the tenant stops paying rentals or the tenant stops the property and leaves the property during your lock-in period. Obviously, where Strata comes into picture is obviously the better asset management, better tenant management. We also encourage investors not to take any leverage beyond the lock-in period. So in case the tenant leaves post the lock-in period, your EMI obligations are already serviced. However, if the tenant is leaving before lock-in period, Strata's asset management team and the leasing team will come into picture and help you realize all your potential lock-in revenue, which will help you clear your EMI obligations. You should, in more than 90% of the cases, you should take a leverage offering in case the cost of debt is lower than the cost of the returns that the asset is going to generate. If your asset is able to generate 7% and your cost of borrowing is 9%, you should never take a leverage, because what you are able to generate is much lesser than what your loan cost is. However, if in case of vice versa, where you are able to generate 9% and the cost of debt is at 7%, you should definitely take a leverage. There are other factors which you need to take into consideration, like lock-in period, interest rates, tenant profile, etc. in case of taking a leverage. Please note, in case the higher the borrowing or the higher the leverage, the higher risk that you are taking, but that also means the higher returns that you are able to generate. So we request investors to treat this very cautiously and take only if the investor's risk appetite or risk profile allows them to take a leveraged offering. In case somebody wants to invest into LRD products with Strata, the benefits that they are going to get is on optimal debt leverage structure, wherein you're not taking too much of debt or you are not taking too less of a debt. So we'll structure your deal in such a manner that you are able to get the best benefits out of it. We'll minimize your downsides to the largest extent possible by way of looking at the best tenants who we are getting on this board, the best interest rates, and the best EMI and the loan terms. We are also looking at better asset management for you. So that's the complete win-win for you when you enter into a LRD product with Strata.